Hello everyone, welcome to Smart Investing. So today's video obviously is going to be about the banking sector. Today I have 5 stocks for you guys. This week has been a crazy week, the banking sector. If you saw my last video, again, if you decided to get into TFC, ticker symbol TFC, which was Truist Financial, I actually went up past 2 days, and for my final decision as of right now, I think I would get out of the banking sector. I don't see it going up and making moves much more because of the latest news that was taking place overseas for the Swiss bank called Credit Suisse, and basically they've been in debt, overloaded debt, for way over 6 months now at least. So now that triggered the Silicon Valley fiasco from last week. It triggered it again. So what I'm saying is Swiss Bank was already going down since last year and borrow more money. So then when the Silicon Valley Bank fiasco happened, it triggered Credit Suisse either, what was it, yesterday or the day before? Oh, we didn't get news about it till yesterday. And so now it's a back and forth thing about triggering and you know, letting all these dominoes fall from the banking sector overall, not just the US, like globally. There's a lot of fear in the market, even though some people are extremely bullish. I don't know why. And the Fed is actually playing both sides, which is kind of weird. They're very undecisive. But one thing's for sure, they're going to decide next week how many basis points they want to raise it or if they want to pause it. So that's going to play into next week. I don't see why they would pause it when supposedly we have very low unemployment and all that. Just a quick update on what's been going on for the week. Other than that, I'm so tired this week of adding videos about Silicon Valley Bank. I've heard it all, and I've been reviewing so many banks, as you guys know, since last year. So this is no surprise to me. If anybody has a say-so, I should definitely be one of the first people to say so, because I've been evaluating these companies for a while now. Everybody just wants to chime in after the fact when I was here before the fact. So again, from what I'm seeing, even though I know I'm coming to an end with the banking sector, I think it's going to come to an end. And I'm pretty much not going to add any more companies to the watch list and recommend a yes to the watch list. That will be my guess on it, even though they might be a good company on paper or a decent company. But again, because of the chain reaction in the market, specifically the banking sector is doing awful right now. And again, I'm expecting a down year. So for the banking sector, I'm seeing very, very downhill things and bad things happening overall, which could trigger actually not only a global market recession, that's going to trigger even more bubbles into the stock market and the financial economy. And I think we're going to go beyond the recession. I think things are going to get even worse. And we might even consider global depression, especially with things that have been going on with China and tensions and all that. So what I'm trying to say is there's a lot of focus on these banks right now, but I'm seeing the bigger picture overall. There's a lot of things that are going behind the scenes that are gonna trigger this effect into a downhill market for the next 10 years. So be prepared for that. I'm already prepared with my watch list and shares and prices and all that. So again, I'm going to release that long-term portfolio update in June. Usually I do it, the last 3 years I've done it, I usually do it in the beginning of the year, the first quarter. But with this fiasco that's been going on, I'm adding videos and trying to see what's been going on in the markets, see how much fear, get, not opinions, I'm not taking anybody's advice, and supposedly be senior analysts and CEOs and whatever. I just want to see what their thoughts are and see if they're fearful or greedy, and see just what they think about the markets. Because some opinions don't matter and some do. So I have to analyze all that. I'm definitely going to be very busy this weekend listening to all the nonstop crap. I mean, literally, like, I can't even keep up with the amount of videos that I've added just to listen to about the Silicon Valley Bank. Just to get an idea what people think, what they might do. So I have to wait on other people's decision before I make my own decision. It sounds weird, but that's just the way it goes when I do my analysis and everything. So anyways, moving on from that, now we're going to get into the stock market for the banking services sector. First stock up, SBCF. So $2 billion market cap company. Obviously the markets are closed. It's too early. Volume is only at 55, 52-week high and low. That's not a bad range. Earnings per share, that is very, very low. Dividends are really low. They pay something, but it's still pretty low. The numbers actually look pretty weak. And I would definitely say it's just because of that drop that happened. Not within the last 5 years. Like, check this out. Let me show you guys again. The chart that I'm showing is for the last 5 years. Look at this drop here. The last 5 days. So, last 5 days. It's dropped here, gone up, but now it's starting to slowly bleed again. This right here, definitely a fake rally. That is so obvious. And the reason being is because look how slowly this has been dropping. And then all of a sudden, somebody wants to buy that up. The reason I say that is because this is not the only chart that you're going to see for this company. You're going to see a bunch of charts going down and all of a sudden straight up. You're going to see a bunch of charts. I mean, I'm only going to show you 5 because I have 5 companies, but this is going to be a popular chart to look at in so many companies in the banking sector, just because the Fed was bailing them out, and now it's started to slowly bleed again. So the Fed has no choice but really to just let it bleed. They're just making the situation worse, bailing it out. I don't know why or what they plan on doing, but things are just gonna get worse. So anyhow, that's only the last 5 days. The last month, you can clearly see downtrend, continued downtrend. Chart looks awful. Even on the first page, this page here, all these numbers look kind of weak. Even the dividend yield, PE, is saying it's normal, but again, I don't like the banking sector. I do like the financial sector, but not the banking sector, if that makes sense. So let's move on to the quants. Obviously, this is based on analysts. So 33% said a buy and 67% said hold from these analysts. I don't take that into my consideration at all, but I just like to get other people's preferences to see where they're at on things. So other than that, analyst ratings are somewhat positive. I don't know why, and I'm sure this was finalized for Q1. So that decision is probably old from 2 months ago. It's not really updated. But again, it takes time to review and evaluate all these companies. Highest rating for the quant was income. I disagree with that. I think the income is awful. Regardless of what the chart says here. Let's see here. So short-term bullish. I don't believe that. That's a fake rally. And then it's saying for the medium term and long term, it's going down. So anyhow, moving on from that, I thought you guys just might want to see earnings estimates. So they actually updated the earnings estimates, and they have to go at least above 40 cents. We're looking at about, I don't know, 44 cents maybe. That's 47, so it's a little bit above the circle, but so yeah, I'm gonna continue reviewing the numbers. ROA went down, ROE went down, earnings seem stable. They seem like they're, okay, for 2020, they went down from 2019. And then from 2021, they went up. And now from 2021 to 2022, they went down. So it's pretty volatile. It's up and down. 86% in debt. Obviously awful number. Balance sheet, obviously very, very high in their debt. That's the way they have to operate. Most important factor, cash flow. So again, I just want to see if this company will survive or not based on the numbers. So definitely negative in their cash flow. We're looking at about, let's see, 700 million. So we're looking at least negative 500 million in their cash flow. And they're definitely in trouble, even if they can use their net income to cover those expenses. So obviously, do not add to the watch list. Cash flow is awful. I don't think this company will survive, even with a $2 billion market cap. And if they do survive, I'm sure it's because they're gonna get bailed out or bought out or something within that decision. But again, not a good company to be invested in. Next stock up is GBCI. Want to look at these numbers. $4 billion market cap company. Like I said before, you're gonna see similar charts like this where it's gonna go down, and then you might have that fake rally going up, which makes no sense. Looking at this first page, the range is not bad. That's all I can say that looks positive. PE, it says it's on par, but I still don't like it anyway. It's close to the 2020 highs, as you can see here. At I got around $41, so it is slightly under $41. I wish other stocks were hitting their 2020 highs, which would definitely be an interesting opportunity to take a look at. But unfortunately for the banking sector, it doesn't look like it. Let's look at the last 5 days. Again, another one with a really bad drop. And then you see a small wave, then all of a sudden, it shot right back up. Makes no sense. That was like, again, like I said, that was actually that bailout. So then we have here another spike up, and then this spike down, and now it's starting to normalize here. Again, starting to go back down. So the chart, very volatile, even from day to day. So we have the 13th to the 14th. So we have here, and then we have the 15th, went down, and now it's starting to go down again as of today. So the low for the week is around, let's see, it is around, we're looking at about 37 bucks, so $3 down from $40.87. Again, not a good company so thus far. Gonna look at the financials. Earnings estimates have dropped, which is a good sign, but again, it's still pretty high. They'll have to beat around 64 cents just to get a good number. Even if they do beat estimates, I mean, the way things are going, people are very bearish on the banking services sector anyway. So with that said, moving on to the ROE and everything else, we have here return on assets dropping, earnings about the same, debt 89.3 from last year. So definitely not good. Net income, respectable numbers and percentages. And last but not least, their cash flow. I don't think I'm gonna even look at the quant ratings. I don't think they even matter at this point. So for 2022, we have they're slightly negative. So they have around 850, 500, so 8, 9, 10, 11, 12, 13. They're pretty much breaking even for their cash flow. And then even with their net income, what is their market cap again? 4.53 billion. So if they only have about, I don't know, 250 million in cash flow out of a $4.5 billion company, that's still pretty low. That's still pretty low in numbers. So dividends they're paying, they paid 5 times actually in 2022. So they went from 32 cents to 33 cents, and they paid actually in January 10 cents, April 33 cents, and then 33 cents in October, and then 33 cents in December. So moving on from this company, I'm gonna say no to this company. They're struggling with their cash flow. Makes sense again with the overall environment, and you know, this is gonna have a long-lasting effect for this year. That is my guesstimate. Next stock up, RVSB, Riverview Bancorp. So obviously the last 5 days, you see this spike up and then all of a sudden goes down, then another spike up and slowly bleeding. Same concept, different chart. Is it the 2020 high? So as you can see, it's definitely going down. Stock price is only $5.53. Excuse me. So market cap is on at 118 million. So very, very small market cap. you're not gonna see much price range. So we're talking about from this drop here like that. So we're looking at a price range from 768 all the way down to like 550. It's only a $2 move. Lowest for the 5 years was actually around 350. So you're only looking at about a $5 move, which is horrible. And then for 5 years, you're only looking at $1 per year. That is like horrific. Horrific. Let's look at the first page, but just looking at the charts and stuff like that, I don't like it. Earnings really low, dividends, I mean, and then the analysts call this a buy rating. Totally disagree. Definitely dumb decisions made by analysts. Highest rating for the quants is 7.86, close to an 8. For the value, let's see. Yeah, it is cheap for its price. Looking at the PE, way below 15. It's at 6. So again, horrible numbers. Horrible numbers. Earnings estimates, it's at 20 cents. So they have to be 20 cents. Again, even if they do, regardless of the fact, banking sector's doing bad. Starting this quarter, going into the second quarter. So again, this is a sector that's going to do bad for the whole year. I just want to see, I think I'm going to skip all this. Well, I'll show it anyway, since I'm already here showing this. So it's up and down with the ROA, return on assets, return on equity. The numbers are pretty mismatched. You have a good year and a bad year. So bad, good, and decent, then went down. Surprised they did pretty good for 2022, or did okay for the returns. We have earnings there that went up in 2022. Their margins are not showing me. I wish I had that, but it's not showing me. 90% debt, so that means their balance sheet has gone up tremendously from 2020 and beyond. So the net income, 21 million. What is their market cap again? 118 million. 118 million. So net income is pretty much like 20% of their market cap, which is pretty good, but obviously because of the low numbers. But looking at the numbers for cash flow are the most important. So we have here 181. So they're 4 million, 16 million. So what? They have 8 million in cash flow. Out of a $118 million company. I mean, by the number, they're just too weak. I mean, they got decent numbers for cash flow, but it's just not strong enough. They're so weak. Too weak. So obviously no for this company. Don't even add them to the watch list. And moving on to the next one. This bank has been in the news as of late also as well. FRBK, First Republic Bank. We see here the last 5 years in a downtrend. Even in 2020 went slightly up to the high of around $5. Then in around March 2022, downhill from there. It went to new lower lows. Another one with a market cap of 100 million, very weak company. That range is horrible, 52-week high and low, only $4 range for the year. That's terrible. PE is very, very low, so you're getting a good value. But again, you made no money if you bought this stock even within the last 5 years, and it's only going lower. Definitely stay away from this stock. I would. Thus far, analyst ratings haven't even analyzed it, so a hold, that means nothing. You'd like to see actually a buy or sell, a more concrete answer. It's okay to see a hold, but still, it needs more analysts to rate this. Value, like I said, supposedly it's good on value, meaning you get a very, very cheap price for the stock, but it's not a good stock. It's not a good stock. So yeah, just looking at the numbers, it's horrible. I don't think this is a company, again, that would survive as well. Just based on their market cap. So we have here, estimates are, around 8 cents. They've missed the last 3 estimates. Missed the last 3. And things are only going to get harder for them. We have here ROA, ROE. Net margins, it's not giving me anything. That is insanely high. 94%. Yeah, they're looking to get bankrupt. Definitely. Now moving on to the cash flow. 540. Yeah, this company is definitely with very high negative cash flow. Definitely mismanaged. I want to see where this location is. So it's in the greater Philadelphia, because this company has been on the news on par with the Silicon Valley Bank. So South Jersey, Philly, New York, so Northeast area. Definitely horrible. Even though they've been around since 1987, this company can go under with that market cap. So obviously don't add it to the watch list. But I guess you can place your bets on options that these companies are gonna fail. Last one up that we have is LDI, Loan Depot. Oh, I thought it said deposit for a second. But Loan Depot, 52-week high and low, awful range. Earnings are negative. That's a sign, really huge sign, that it's gonna go under. Market cap is at 562. The dividend yield is at 17%. Insane numbers. So in March, look at that, it's just curved straight down. So in March of 2021, that's where it started at around 30 bucks, and it just went downhill from there, all the way down to 1.27. And then, looking at the analysis, 10 analysts rated this at 100%. We have 10% a strong buy and 10% underperform. So majority decision was hold back, don't add or don't remove any shares or prices or anything, just keep it as is. Highest quant rating is the income. Oh, just received news. Walmart will be paying a dividend of 57 cents per share, paid on April 3rd. TSM will pay a dividend of 44 cents on the payable date of April 13th. Okay, so there you have it for some other dividend news. Let's continue with this process. So income, obviously, because of that high yield, and they're paying for the year 32 cents. Let's see how much is it. So for, again, only for 2022, they only paid one time, 8 cents. I don't know how they got 32 cents. That was a guesstimate. They were guessing to pay each quarter, but they only paid for one quarter. You know, out of the, when I say quarter, I don't mean actual 25 cents. I mean every 3 months. If anybody's confused, just to clear that confusion. So this payment for the dividend, that was the total for the year, but obviously you get 4 payments. So 32 cents divided by 4 payments, that's 8 cents per payment. So every 3 months, 8 cents. So you get a yield of around 18, but they only paid one time. So even if you round that up to 18%, divide that by 4, either way, you still get that 8 cent payment, which is horrible. 8 cents out of what, $1.80? So 8 cents going into $1.80. Still horrible anyway. Makes no sense really. But let's look at the financials real quick. So that's actually a trap. This is actually a value trap. Looking at that fake dividend, and then this is ugly. I'm seeing negative numbers even for the earnings. This is gonna go down very, very soon. 86% debt, about the same, but those negative numbers, very, very awful. Not really good to look at when you have negative numbers. Not good at all. Definitely horrible. Stay away. I'm gonna draw a very bold X. So LDI, if you have that to the watch list, it's a value trap. Awful, awful, awful company. So thank you guys for watching. The market is gonna open in like 30 minutes. As you can see here. Again, it's gonna be crazy in the markets. It takes a very patient investor to do this and look into the numbers. Again, I am glad to provide you guys with the information being held. If you like what you see, you can like, subscribe, or comment. Down the line, I'm eventually gonna go over more companies. So whatever company you have in mind, I just have to organize it in playlists by sector, so that way you guys can see which sector are the stocks that you're looking for. That's gonna take a whole new, I gotta take a week off just to organize that. But again, be patient with me. I have so much work ahead of me. I have a life and stuff aside from doing financials. And yeah, it's gonna get pretty interesting for the next few weeks, today and beyond, even till June. So second quarter, definitely interesting quarter, and throughout this whole year. So other than that, that's my final closing comments. Thank you guys for watching. Again, like and subscribe if you like the video. If not, if you want me to improve, you know, I can be happy to do that. Just give me some comments as well. Email me, whatever. So that's always helpful. So thank you guys, and I'll see you guys in the next one.